In today's video, we'll do a detailed comparison between two small cap funds which are having the highest AUM in the small cap segment. These funds are Nippon India Small Cap Fund and HDFC Small Cap Fund, and also try to understand which one is better and in which fund one should invest. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. So let's start the video with the basic details. Firstly, for Nippon India Small Cap Fund, the AUM, that is the total asset under management, which is more than 41,000 crores, which quite a few people feel is very high for a small cap fund. The expense ratio is 0.69%, which is at par with the average expense ratio of small cap schemes. The benchmark index, that is the reference against which the scheme is compared, is Nifty Small Cap 250 TRI. Now let's look at the basic details for HDFC Small Cap Fund. Here, the AUM is around 25,400 crores, which again is on a higher side for a small cap fund. The expense ratio is 0.73%, which is a little higher than Nippon Small Cap Fund. The benchmark index is Nifty Small Cap 250 TRI. Now let's look at the sector-wise allocation. Firstly, for Nippon India Small Cap Fund, from the table, it is very clear that the fund has highest allocation to capital goods sector, followed by finance, services, healthcare, and consumer staples. Now let's look for HDFC Small Cap Fund. Here, the highest allocation is to the capital goods sector, followed by financial, services, and healthcare sector. And when we compare this allocation to the category, it is quite different for both the funds. Now let's check the portfolio allocation. Firstly, for Nippon India Small Cap Fund. As evident, small cap shares form around 68% of the portfolio, whereas large cap shares form other 13% of the portfolio, and rest around 15% is allocated to mid cap stocks. Here, the portfolio is very much diversified with around 197 stocks in the portfolio, and top 10 stocks form around 15% of the portfolio, and top 3 sectors form around 41% of the portfolio. Now let's look at the portfolio allocation for HDFC Small Cap Fund. Here, around 82% is allocated to small cap stocks, whereas mid-cap stocks form around 7% of the portfolio, and rest 3% is allocated to large-cap stocks. The portfolio seems not so diversified, as the portfolio is having 74 stocks, with top 10 stocks contributing to around 29% of the portfolio, whereas top 3 sectors contribute to around 47% of the portfolio. Here, if you observe, both the funds are having different strategy, as Nippon is having a huge number of stocks in its portfolio, and this is one of the reasons that the fund is able to perform well even with the rising AUM. Whereas in case of HDFC, it has only 74 stocks in the portfolio and follow a buy and hold strategy, which is evident from its turnover ratio of just over 6%. Now let's look at the top holdings. Firstly, for Nippon India Small Cap Fund. As evident, HDFC Bank, Credit Access, and Karur Vyasya Bank are the major stocks of the financial sector, whereas KPIT Tech and Cyient are the main stocks of the technology sector. Tube Investment of India is the main stock of automobile sector. One more thing which strikes here is that no stock is having an exposure of more than 3%. Now let's look for HDFC Small Cap Fund. Here, Bank of Baroda, IDFC, and Equitas Small Finance Bank are the main stocks of the financial sector, whereas eClerx Services, First Source Solutions, and Great Eastern Shipping are the main stocks of the service sector. Sonata Software is from the technology sector with the highest exposure of more than 5%. Now let's also look at the fund managers. Firstly, for Nippon India Small Cap Fund, Mr. Samir Raj has been managing the fund since January 2017, that is, since last almost 7 years, and that too quite efficiently. Now let's look for HDFC Small Cap Fund. Here, Mr. Chirag Shetalwad has also been managing the scheme from January 2014, that is almost from the inception of the scheme. Hence, we can say that both the funds have the same fund managers since quite a long time, which is quite positive and an advantage for the scheme. Now let's look at the trailing returns. Firstly, for Nippon India Small Cap Fund, on comparing the trailing returns for the period 1 year to 10 years, the fund is able to beat its benchmark and the category with a good margin. But if you check the performance for 1 year and less, it struggles a bit. Generally, we should not consider the short-term performance of a fund when we are taking any decision, but should always keep this in mind. Now let's check the trailing returns for HDFC Small Cap Fund. Here also, the fund is able to beat its category and benchmark for the period 1 year and more with underperformance compared to the category for 5 years and 10 years time frame, and also struggles to beat for the period 6 months and less. Also, when we compare the performance of these two funds, Nippon Small Cap Fund's performance has been better than HDFC for the entire time frame, which makes Nippon a clear winner on the performance front. But as I've always said that trailing returns data never gives a full clear picture of the fund's performance. So now let's check calendar returns for both these funds. Firstly, for Nippon India Small Cap Fund, here we have data from 2014 to 2022 and also till date for this year, that is 10 years data. Here if you observe, the fund is able to beat its benchmark and the category 9 times out of 10, which clearly makes the fund quite consistent in its performance. Now let's look for HDFC Small Cap Fund. Here it is able to beat its benchmark 8 out of 10 times and category 6 out of 10 times, which is quite good, but here also the consistency of performance is better for Nippon India Small Cap Fund. Now let's also check the SIP returns before checking the rolling returns. Here we have taken SIP of rupees 10,000 monthly for 10 years. Hence, the invested amount after 10 years would be rupees 12 lakhs, whereas total corpus of Nippon India Small Cap Fund would be rupees 49 lakhs 9,000, which translates to 20.51% annualized return. Whereas for HDFC Small Cap Fund, it would be 39 lakhs 96,000, which is 19.46% annualized returns. Here also, the performance of Nippon Small Cap Fund is better than HDFC. Now let's quickly check the rolling returns. Here we'll check the rolling returns for 1 year, 3 years and 5 years and compare to its index. Firstly, let's see the 1 year rolling returns. From the graph, it is evident that both the funds have been able to beat its index 94% and 73% of times, with Nippon having a better average returns and a little higher standard deviation. Now let's see 3 years rolling returns. Here, Nippon is able to beat its index 100% of times, whereas HDFC is able to beat 92% of times, with Nippon having a little better average returns and higher volatility. Now let's also check the 5-year rolling returns. Here also, both the funds are able to beat its index 100% of times, with Nippon having a better average returns with more volatility. Both the funds have a zero chance of negative returns. Hence, from the rolling returns data, it can be concluded that both the funds are having good rolling returns, but here also, Nippon is having the upper hand when compared to HDFC. Now let's see how the fund performs on risk parameters before concluding what investors should do. Firstly, let's look for Nippon India Small Cap Fund. First, mean returns, that is the average return in a year, which is 37.01, which is more than both the category average and the benchmark. Here, higher the value is better. Second one, standard deviation. That is a tool to measure how much the returns have deviated away from the mean returns, which in this case is 15.79 and is less than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio. That is a tool to measure the risk adjusted return, which is 2.05, which is more than both the benchmark and the category average. Here, higher the value is better. Fourth one, beta. That is the volatility of the scheme compared to the benchmark, which is 0.84, which is little higher than the category average. Here, lower the value is better. Fifth one, alpha. That is a tool that measures how much better the fund has performed compared to the category. Here it is 10.44, which is higher than the category average. Here, higher the value is better. Now let's see for HDFC Small Cap Fund. Here, the standard deviation and beta values are not better than the benchmark index and the category average, which indicates that the fund is a little more volatile than its index and the category, but is able to generate better returns than its benchmark and the category. Here, the risk parameters of HDFC Small Cap Fund is no way poor, but when compared to Nippon, it is not able to beat Nippon Small Cap Fund. Hence, here also, clear winner is Nippon. Now let's see the upside and downside capture ratios. Firstly, for Nippon India Small Cap Fund, the upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here, the value is 101, which indicates that the fund outperformed 1% than the index during this rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 59, which indicates that the fund declined 59% as compared to the index during this fall period. Here, lower the value is better. Now let's see for HDFC Small Cap Fund. Here, the upside capture ratio is 96, which indicates that the fund underperformed 4% more than when the index rose, which is not that good for a fund. Here, the downside ratio is 64, which indicates that the fund also declined 64% as compared to the index during the fall period. Here, lower the value is better. On comparing for both the funds, the upside and downside capture ratios of Nippon Small Cap Fund is having a better capture ratios. So now let's see what investors should do. But before concluding this video and suggest what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to hit the like button and also subscribe to my channel if you have not done till now to watch such interesting videos in future also. Here I would like to clarify that this is not a buy or a sell recommendation and one should take decision by himself or after consulting his or her financial advisor. This video I have made for educational purpose only and my aim is solely to provide a real insight into the fund's data. Please do not mistake this as a buy or a sell recommendation. So coming back to the conclusion, what investors should do. First, for the existing investors, from all the data we have seen, we can say that the performance of both the funds, that is Nippon Small Cap Fund and HDFC Small Cap Fund, is good. And if one is invested in any of these funds, one can stay invested. Both the funds have underperformed in the period 6 months and less, but that should not be a problem, as good and consistent funds also tend to underperform in short durations. Here I would like to mention that HDFC Small Cap Fund, the trailing returns data is not that good and the fund has underperformed its category in quite a few time frames. Hence, I feel that investors of HDFC Small Cap Fund should be a little more cautious and monitor the performance of the fund more closely. This is my personal opinion. What do you feel? Please share your views in the comment box. Second, the new investors. If you have narrowed down the choice between these two funds, then I feel that there is no doubt that Nippon India Small Cap Fund is a better choice than HDFC. Quite a few of the investors are concerned about the high and rising AUM of Nippon India Small Cap Fund. But I feel that with the strategies being adopted by the fund manager like increasing number of stocks in the portfolio, he would be able to generate good returns in coming times also. Again, this is my personal opinion and I may be wrong in this also. What do you feel? You can also look at other small cap funds like Quant also. Do share your views in the comment box. I would like to add that I have Nippon India Small Cap Fund in my portfolio and will be continuing my investment in this fund. I will again try to review these funds separately after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you have not done till now and also press the like button. Do check my older videos. Click the attached cards to watch the videos. Thank you and see you again in my next video.